Welcome to TheoTrade. This is Don Kaufman doing the Theo Night video for October 17th, 2016. First and foremost, I want to invite each and every one of you to an event I'm going to be hosting on Tuesday, October 18th. Of course, that's tomorrow from 7 p.m. to 8 p.m. Central Time. And that event is 3 essential skills you cannot trade without. It's something I feel very, very strongly about that we've been talking about really for many, many years is how you actually approach trading. And that is, well, most people start out there, I'm bullish, I'm bearish, and, I think the market's going to do this, and I think the market's going to do that. We're going to look, at a very detailed approach to trading that's going to involve everything from the logic that you use for trading, things as simple as risk reward, to the strategy, to capital allocation out there, and really all of those essential skills coming together, in addition to, for example, what direction the market might go, are all going to be a portion, again, of what we're going to call essential skills. The address over there is TheoTrade.com/essential-skills. Again, TheoTrade.com/essential-skills is the web address. Go to that address there, sign up for the evening event over there. Again, 3 essential skills you really cannot trade without after 15 years in the brokerage industry. These are the skills that I've kind of put together based on all the order flow that I've really watched out there. Now, to tonight's market, the S&Ps drift a bit lower into the 21-23 realm. The levels that I've been discussing here for, again, kind of umpteen weeks have really held and kind of resonated with the marketplace. If you are not familiar with those levels, they are 21.53, 21.43, 21.29, and down to the 21.12 arena. Now, yes, I have 2100 marked in the chart, but that was just for fun. It's a good downside target. Nevertheless, going into some intraday trade today on the S&Ps, we came up to the 2129 level, stopped on a dime and backed off it, and again saw volume bursts at those particular levels. Now, if you see this large up move here in the post-market trade, this is, the cash close right here. In just after the market closed, we actually saw the markets bounce up. Why? What ultimately happened? Well, it has a name. It's called Netflix. Well, earnings have kind of taken center stage in some of the recent trade. And what you're looking at in terms of Netflix, well, can only be described as a 2 sigma move. You have no idea what a 2 sigma move happens to be. I'll explain it. Over here on the right-hand side of your screen is what is termed expected move. Now, whether you trade options or not, it's neither here nor there. The option marketplace puts a price tag on risk. In this particular case, the options market was dictating about an $11 move. All right, so it was pricing in about an $11 move. Well, here's where Netflix ultimately closed, pretty much 100 on the button with about an $11 move. Here's where Netflix is currently trading. So we're all the way up at about 119. We'll just round it to 119. Now, the expected move is known as a 1 standard deviation move. So we're expecting, about this $10 or $11 either up or down move. So if you will, what that kind of amounts to here in Netflix, and I'll kind of draw it on. There's Netflix trading at 100. It says it's supposed to go up about $11 or down about $11. And that's about what? 68% of occurrences should stay in that range. Well, guess what? Netflix moves almost $20 higher, moves all the way out here to the 120. And what that happens to be is almost 2 times expectations out there. Talk about an extreme move. The lesson out of this? You don't sell options naked. You sell options naked into an earnings announcement. What did you think was going to happen? Netflix is an underlying that in recent years has had a 3 standard deviation move. I remember a couple of years ago before Netflix split, it was trading right at 100. Okay, and the earnings came out. The next trade was 3 deviations higher. It was a $12 expected move, and the stock moved $37 higher the next day's open. And we're almost in the exact same thing. And over the years, people just do not learn very, very simple skills surrounding things like earnings. And that, with that, the earnings announcements, again, if you're going to go in and you want to tinker with earnings, there's really only a few things that can happen to you in earnings, right? And it's pretty simple out there. Around earnings, either a stock can go up, a stock can go down, a stock can stay totally flat. You're like, well, that's it. Well, no, because there's what they call neutral long, and there's what they call neutral short. Now, that flat is neutral long and neutral short. What that basically means, well, first, if you're bullish, you just think the stock's going up, you can use some type of a spread. Bearish, all right, you think the stock's going down, use some type of spread. Neutral long, what neutral long means is you're betting that we're going to move outside of expectations. So if the expected move, all right, is plus or minus $11, betting long means you think we're going to move outside the $11. Betting it short means you're going to sell options and hope we stay inside the expected move. And when it comes down to earnings, really, that is it. And what you're going to see me do is in the next few days, I'm actually going to set up a couple of trades around the earnings announcements. And I'm not actually going to recommend really any of the trades out there. I just want you guys to get a feel for what you set yourself up for in terms of earnings trades. Now, that is not going to be really the entire, for tonight, because again, the earnings, I kind of put them to the back burner over there. I'm not huge around trading earnings. Again, 15 years having watched order flow, I know what works, what doesn't. Now, what is interesting and what really you should be thinking about and what should take center stage over here is not so much about, Netflix and the earnings. I know earnings are kind of sexy out there. What is substantially more important is that you've had a number of key financials come out with earnings. Okay, here we go, talking about earnings. Yeah, but they've been beating earnings expectations and fading off of those levels. Bank of America is the next one that came out this morning. Again, saw the same action as that we saw in JP Morgan, Citi, and Wells last week. JP Morgan, okay, Citi, they come out with earnings and they faded off those highs. Bank of America, the exact same thing. Comes out, earnings are pretty good over there. The stock faded throughout the course of the day. Yes, Bank of America still ended up 5 cents in the day, but their numbers handily increased. Again, the tide is turning out there. So once again, I want to mention, I really urge you guys to join me. 3 essential skills, really, we felt that you could not trade without. It's Tuesday, October 18th from 7 to 8 p.m. Central Time, theotrade.com/essentials-skills. Thanks, everybody, for joining us here at TheoTrade. See everybody tomorrow night. Bye-bye.